Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the top plays from today, from Friday, the last trading day of the week before the long weekend and the Martin Luther King holiday, which the markets will be closed on Monday. And so first up we have WPCS. Okay, so it did close up nearly 39% here. Notice RSI is back above 70. You have Fasto above 80. You've got Plus DI breaking out here, showing the bulls are taking control. And so today there was a really bullish move above the 50, 100, 200, and 300 day moving averages. That's the green, gold, blue, and red lines. So it's a really bullish move above those levels. It had been turning the middle Bollinger Band into support on the start of January. That's the dotted purple line. Notice it had been in a downtrend, and so it started turning the middle Bollinger Band into support, and then it broke above yesterday. It closed above the top of the descending resistance line. That was your signal it was heating up, and then today it broke above those moving averages. So as long as it stays above 137 and turns that level into support, the next key level to break is going to be the November 20th high close here, which is at 180. If it can close above that, it could run up here. You've got the close here on the 10th, about 9:15, and then above that is 260, the closing price on October the 11th. That would be the ultimate target if it could retrace back up to that level. Notice there was a giant volume spike. Now, if it pulls back below the 100, 200, 300 day simple moving averages, that'll signal that it's not quite ready to run, and you could see it pull back to test that 50-day simple moving average and EMA 4 down there at 124 and work its way back into the bands. It really needs to stay above the 200, above those moving averages now that it closed above. Notice how strong it was. This is the 15-minute chart. So this had the classic, it wasn't the super tight Bollinger Bands, but you could see the Bollinger Bands were tight the last couple of days. Volume was light, and then if you could see here yesterday, it got above the moving averages. Notice that down here the blue line is the 300, 200, and then you have the 100 and 200. That's the gold and the green, the red, and the blue. And so when the candles got above all those levels, that was your big clue that the chart was heating up and bullish. Okay, and then it was holding that middle Bollinger Band. When the candles are trading above all the moving averages on the 15-minute chart, that's your signal that the chart's bullish. Now it has to stay above in order to keep heading higher. And then today at the start, you could see it was riding EMA's 4 and 8 support. It held EMA 13 on the test, and then it was just super strong into the close. Look at the big volume. Volume really came pouring in. It closed, holding EMA 4. If you see a drop below 146 on Tuesday, that'll be a signal that it's cooling down. As long as the middle Bollinger Band way down here at 127 is holding, this uptrend is intact. So yeah, really strong move on big volume. We'll see if it can follow through next week. So congrats everybody. I know there were a lot of people in the chat. Okay, let's look at MYSZ. Closed up 43% today. So yeah, this was nice. It had a nice bounce, a nice recovery. It still has RSI here at 64, so it's in the bull zone with room to run. You can see Fasto now is back at 52. It's got a lot of room to run until the 80 level. So it came down here, and it looks like it almost filled the gap, but not quite. There's a let's see. So the lower wick on today's candle did not quite fill the gap. Notice there's a space between the high of day yesterday and low of day today. So if the share price did drop down to that second green line there, that would fill the gap. So that's the always the risk of gaps on the chart. There is one way down here too. So many times with penny stocks, the share price will pull back to fill the gaps. They become targets for the market makers, targets for people that like to short stocks to pull it back to. And then once you get a gap filled, many times it's a climax, or it's an event for a bounce and a reversal. But right now, what has to happen is MYZ or SZ is hitting that next key level. Intraday, it was looking better. It was above the key resistance level, which is right here at the 300-day simple moving average. Okay, currently at 227. It has to close above this blue line here and turn it into support. It closed above that level on the 8th, which was good, but it pulled right below. It held EMA 13 support, the orange line, which is really good. The chart's still really bullish. It has it has a nice uptrend going. The close today was back above EMA4 at 183. This is everything that you want to see on the chart. It just has to get above the top moving average. Notice that down here you have the 100, the 50. The middle Bollinger Band is also the 20-day simple moving average, and then you have the 200-day simple moving average as well. You have EMAs 13, 8, and 4. It's currently above all the moving averages except for one, and that's the 300. That's the last one. If it can get above that level, turn into support, that's going to be your signal that wants to head higher. Fail to break 227 and close above, it's going to consolidate. That it's just as simple as that. And that's when you could see it pull back, fill that first gap down there to below 170. It would probably test that EMA 8 at 164. If that broke, you could possibly see a drop down to $1. So because that would fill the gap way down here. So just keep that in mind. It has to turn the 300-day simple moving average into support. When you're playing the penny stocks, you can't fight the charts. The charts will lead you to the pot of gold, but they will also lead you away from danger. You just have to be, you ride the wave and just try to be on the right side of the trade. Okay, let's look at INPX. And just remember, these are dates. All these stocks that I'm showing you are dates. They're short-term trading vehicles. Okay, these are not investments. When they're penny stocks, they're not investments. These are not. This is where people are trading. So just to throw that out there, just that's our angle, anyways, and that's the angle in the analysis, and that's what we try to teach for the penny stocks. This is more of a trading vehicle for people, and so and being such, once they start giving you trouble and the chart starts breaking down, you want to exit. So that's the whole key. Is you don't want to ride these penny stocks down. That's all I'm saying. Just don't become a bag holder. And so here we've got RSI at 59, and then you have Fasto at 52. So they're both heating up. This is ticker symbol INPX. It closed up 23%, and it finally had the technical development that we were looking for. I'll show you that in a second. So now that RSI and Fasto, they're both above 50, that's a signal the chart's heating up. They need to stay above that level, and they both have room to run. Now this was an interesting chart. If you notice this last week, it had attempted multiple times to close above this gold and green line. Okay, the two lines here, and with the two big black candles, these are both opens up here, and then the bears were able to drive it all the way down, and it basically it closed at the same level both days in a row. But each of these closes were below the 150-day simple moving averages until today. Today it finally closed above. So that should be the bull signal. Now, back here on the 11th of December, it closed above, and then you had the close above in November, and each of those closes, it failed to deliver. So is it going to head fake again? If it does, it's going to be a signal that it's not ready to go. So the only way that this is going to be a good play from here, if you're long, is if it stays above 32. It has to close above 32 and hold that level. That's the gold line there. If it closes back below, it's going to signal it's not ready, and then you could see there's a gap back here between high of day on the 8th and low of day on the 9th. You could see a drop all the way down to 24 to fill the gap if it fails to stay above 32. That is the downside risk. Now to the upside, really, you want to break through the opening price here from Wednesday, and then you want to get up here to the high, this high close here zone from December, which is just below this red line, and then you have the closing price here in November. Basically, you want to get up here to this 42 level, and if it can get above 42, it could possibly run back up to 52 to this high close in October. That would be those would be the targets. Now it has to stay above 32. Look at the big volume. There's giant volume here, so it looks like they did load up, for a potential push higher. Also, check out how it created a double bottom. Back in August, it came down, it hit a bottom. It created this support level down here in September, and then notice how it came down and hit that level and held here in December and January, and then now it's taking off. This is a big double bottom. So we can see we'll see if it can push higher. Also notice this red descending resistance line. Okay, so that's lined up right here with the I believe is at the 35 level. yeah, the 35 level. You want to see a close above that. If it can close above that 35, that's going to signal it wants to head higher. Okay, let's look at YUMA. Okay, so it closed up 24% today. Congrats, everybody. We were on this play yesterday. And so yeah, so congrats everyone in the chat and everybody that's getting our alerts early. It's the premium chat's where it's at. I put out alerts everywhere, and I try to give out lots of free information. But you know, you have to take care of the premium chat first, and that's where the best alerts are at. And so yeah, we were discussing this yesterday on the break above resistance intraday, and then notice how now you've got the bullish crossover here on plus DI, the green line's above the black line. So the bulls are taking control. Also look down here at the volume bars. There was a big volume spike, largest volume day since November. The big move today was the break above the 200-day simple moving average, which is at 147. The close above was very bullish. It also closed above high close horizontal resistance, which was the high close here in December, the first trading day of December. Notice yesterday it closed right at that level. It had broken above that level intraday, and that's when I made this chart. The annotations are from yesterday, and so we were looking for a close above that level to signal it wanted to head higher, and today it made that giant push. Notice the wick, the upper wick on yesterday's candle and the lower wick on today's candle, it filled the gap. There's no unfilled gap on the chart. There's no space or a reason for the market makers to push the share price back. And the interesting thing is that I had put this channel in yesterday, and then today it busted through the top of it. So that was a really bullish move. You want to see this red line turn into support along with the 200-day simple moving average, and if that happens, the next target is the 300-day simple moving average at 197. So that's what we're looking for, a run up to $2. It's going to need to close above $2 to head higher. You know, it closed above September high close horizontal resistance. It's up here, up here above August levels. Yeah, this is really a big move. You're going to have to go now back to July to find the next resistance levels if it can break out above 180. So yeah, we'll see if YUMA can continue heading higher. Now it needs to stay above that 200-day simple moving average to continue being a good setup. If it closes below, that's going to signal weakness. Okay, let's look at ARWR. It closed up 13% today. Notice that this was a stock that we alerted yesterday. So this is one that we've just been putting updates on because it has this nice uptrend going. And yesterday we put out the alert that it closed above high close resistance. It closed above these two candles right here, and that was signaling more upside potential. And then look at today, it followed through. So take note on that. We post examples of this on a daily basis of how a stock closes above a high close level, and then it follows through the next day with a move higher. It makes it really good for a swing trade. If you caught our alert yesterday, you could have loaded, and then you could have used today to lock in some gains on the nice move higher. If that's what you want to do, you can keep riding. But we use it as a swing trade method, and so you always want to be putting in those horizontal resistance lines. Now, as long as that EMA4 at 512 continues to hold, that this uptrend is really strong. If it closes below, it could drop back down. Now you want to see this prior high close resistance level turn into support. You want to see the share price stay above 480. Now let's look at the key level that it needs to break. This is the chart that we showed last night, the ARWR weekly chart. Check out the first thing. Volume is a really important indicator, and so you always want to be checking the volume. It tells a lot. You can learn a lot about a trade by checking out the volume bars. And so you notice here that it was the largest volume week since way back here in 2016, November 2016. Two big volume bars in a row. I mean, notice that the volume last week was huge as well, compared to the average weekly volume. Because remember, this is a weekly chart, and each candle takes a week to set. And so notice that high of week hit that 200-week moving average, which is the red line, and the 300-week moving average, which is the blue line. Notice how it closed right below both levels. It's not a coincidence, that this is the program trading, that they weren't going to let it close above. They pulled it back. Now, one of two things are going to happen next week. It's either going to break above these levels, and it's going to close above 610, and that's going to signal it's going to head higher. I guess three things could happen. Or it could fail to break, and the candles could work back into the bands, and if that happens, then you're looking at EMA4 at 475 as the key level to hold if they pull back into the bands. or it could go sideways. I guess, which could possibly happen, which was what happened back here in 2016. Notice it hit the top moving average and it just went sideways. So there is a possibility that that happens as well. Now, if it can close next week above 610 and turn it into support, that's when you could see the breakout higher, and then it could fill that jar back up to that previous high, which high close from 2016, which is 750. So if $6, that 610 level turns into support, 750 becomes the target. This has been a beautiful swing trade. I mean, this is the kind of chart that you could just keep riding if you're a long-term trader. Notice how when it came back, you know, it was riding EMA 4 support higher here, and then when it pulled back, it bounced right off the middle Bollinger Band. That's exactly what you want to see. The uptrend was intact. This would have been the load candle right here on the in December, you know, for the continual ride. But yeah, when you get a really strong trend like this, when it breaks, what you want to do when it's riding above the EMA 4 on the weekly chart, you want to try to load on that first week above that middle Bollinger Band, the first close above. Notice how that was the first close above the middle Bollinger Band since way back here in what was that, October of 2016. So in July of 2017, when it closed above, that was your signal to jump in. And so it's always best if you're looking for, because people are always asking me about longer term plays where they can just park some money. Well, you want to have a good bullish weekly chart, and then you want to get in on the first week. And if you could do that, then you're just in the driver's seat the entire time. And so, yeah, that's how you get a good longer-term swing trade going. It's all about the entry point, EPI, you know, EPIE, entry point is everything. And that's kind of how, you know, that's what it's all about. If you can use the charts to get the good entry point, then you're in the driver's seat for the entire trade. Okay, so ITUS is breaking out this week. Notice it closed up 51% for the week. I was going to show you the daily chart, but it's busting out on the daily chart. And so what do we do when it's busting on the daily chart? We look at the weekly chart to find the next key resistance levels, and you can see exactly where it's hitting. Notice how this is just like the last chart. I mean, look what this chart's doing. I mean, hitting the exact same levels, the blue and the red line. Oh, the moving averages are always the same colors on my charts. It makes it really easy for analysis. And so look at the same thing, the blue and the red line. It's hitting the 200 and 300 week moving averages. It's the same setup. And so this is my theory, and you know, our theory, everybody's theory, that the patterns never change, just the ticker symbols. You know, right now we're looking at ITUS, and on this chart we're looking at AWR, and to us we could really care less what those are. All we really care about is the pattern, because the patterns are what never changes. The only thing that changes is the ticker symbol. So if you can learn the patterns, then you can learn how to profit. So it's really about playing the pattern. And so right here, the hitting the 300 week moving average, it has to close above. If it closes above 428 for the week and turns it into support, then you're talking about a run up here to the top of this 575. Okay, if it fails to get above that, you're going to see it drop below that 378, and it could drop down to $3. This is either going to be a temporary top, or it's going to break above and head higher. If I was in ITUS, I would just be watching that level, and if it's you got your stop loss right there. If it drops below 378, you know, you probably want to head to the sidelines because it could drop down to 3. If it breaks above 428, that's your signal to keep riding. Okay, let's look at GBTS. Unfortunately, yeah, I think I just have been on this too long. Sorry, I'm making this video way too long. I'm sorry. Yeah, so look at GBTS here. Yeah, so I'm not sure if you've heard, but they're going to have a reverse split. So yeah, many times for over-the-counter stocks, a reverse split would be a really bad thing, and you'd be like, "Oh my gosh, this is going to be horrible." But with GBTC trading $40 to $100 million in volume in a single trading day, which is huge for the over-the-counter, what I heard, it's going to take it from basically this 1970 level down to $90. And so if this drops down to $90 after a reverse split, that's gonna I guess it wouldn't even be I guess they're going yeah, so basically it's gonna drop the price, so it's gonna be the opposite of of the reverse split, because the reverse split would you know, you do that to raise the share price. They're using it to drop the share price. So yeah, so this is going to be interesting to see how it plays out. So what we want to see here, Okay, so check it out. It's got this descending. It's got I would say it has a symmetrical triangle pattern going right now. You have descending resistance, which I should have made that line red, and you have ascending support. And then if it can break above this line here, and it basically EMA's 8 and 13, that's the lime and orange lines, and then get back above the middle Bollinger Band at 2261, that's when it can get moving. It closed just above EMA 4 at 1956. It needs to turn that level into support. If it gets back below EMA 4, that's going to signal downside risk. This green line here, there's a green line running. That's the 50-day simple moving average at 1667. It has to hold that level. It's been bouncing off of it. If you see a GBTC close below the 50-day simple moving average, that's going to be a big red flag, and that's when you can see a drop down to down to that 1200 level, down here to the 100-day simple moving average at 1190. So yeah, so this is a crucial level in the charts. You know, it's riding support here. It has to break above. If you see it drop below 1700, that is going to be a red flag. Okay, so let's look at BTC here, BTSC. Okay, so they yeah, let's look here. BTSC is bouncing today, okay, and so it formed a bullish engulfing reversal pattern, and that was a really good reversal pattern. As you can see here, it had multiple red candles in a row, and then you've got the nice bounce off of the 100-day simple moving average here. If that level can turn into support, this is where it should hold and get the reversal going. It was a good start today. Today, bullish engulfing formed, which is a really strong reversal pattern. There's the big white candle with the previous black candle or red candle, and so there were multiple 7 red candles in a row. It had been right at EMA 4 resistance lower. It's the first close above. When it closed above back here in December, it failed to hold and the downtrend continued. So it's going to need to stay above that level. It has to stay above 18. What it needs to do is get above EMA's 8 and 13, and then above this 50-day simple moving average. Notice that it had bounced off that level and then broke below. This is the potential downside risk of GBTC. If it follows this trend, breaks below the 50 and goes down to the 100. That's what I was just talking about. See how it's hitting the 50. It's a very similar setup. If it drops below that 50, it's going to hit that 100 just like this did. See, it's the exact same setup. And so basically, this has to get back above that 50-day simple moving average at 22, turn it into support, and then back above the middle Bollinger Band at 24.5. So it has some work to do. It formed a nice bullish reversal pattern on a nice volume spike, and it was really strong on the 15-minute chart. If you look here at the 15-minute chart today, you know, it did have a pullback there. You can see that climax spike. So basically, what happened is it was in a big. It's been in this downtrend. It failed to get above the 100 simple moving average. That's the gold line, and it pulled back, and it was hitting this 50 simple moving average, the green line, and failing to turn the middle Bollinger Band into support, the dotted purple line, and kept dropping lower. And then it finally got a bottom this morning, and it came up and it broke back above that 50 simple moving average. That was the first break above that line since back here on the 5th. And so that was your signal that it was heating up. It put it in play, and we did put out alerts in the chat. And so yeah, so it was, if people had a chance to load in this zone here after the break above resistance, we wanted to see if it was holding. It held, and then it had the giant breakout higher. So it was really good timing for everyone that caught the alert in the chat. It was you know, it was the perfect little pullback and then bounce off and then the run higher. And then it did have the climax spike here at 115. You know, it's never fun. It's always better if they just keep running. But this gave everybody a chance to lock in gains that wanted to. Notice that it happened at the 200 simple moving average. It failed to hold, and it pulled back, but it had that nice bounce off the middle Bollinger Band. It held the middle Bollinger Band. It stayed bullish into the close. Now what it has to do is get above 19.5. It has to turn that level into support. If it does, then we're looking at the 300 simple moving average. Once it's above the 200 and 300 on the 15-minute chart and they turn into support, that's when it can get running. If they turn into resistance and it drops below the middle Bollinger Band at 18, that's going to signal consolidation. So yeah, so we'll keep an eye on it. We'll see if it can follow through. Okay, let's look at some cryptocurrencies here. I just want to show you real quick. Check out EOS. Okay, so I did a cryptocurrency video late last night. You know, I do that a lot of times. I make them later in the night, so sorry about that. But for people that go to bed that actually sleep, the thing is that a lot of the action happens, you know, around midnight Pacific Standard Time. You start getting the charts heating up, and so this one, basically, you know, between 10 and 12, and so this had that nice breakout yesterday above resistance, and so I had that in the chart. You got the nice follow through, you know, it's following through. It's got a really nice uptrend. So it broke out. This is another example of the breakout above high close horizontal resistance, and then the follow through. You know, and so that this is a simple pattern that you could profit on off of regularly. If you draw the high close resistance level in, you wait for that close above. You know, you load on the close above, and then you look for that follow through the next day to potentially sell, or you can keep riding. But it gives you that opportunity to, because many times you get follow through after the close above. Okay, let's look at BTG. And yeah, this is a really sweet chart for EOS. It's super strong. You know, it's back above the middle Bollinger Band. It's riding EMA4 support higher. The signal right now is to keep riding. It looks good. It's looking good still. We'll see if it can keep it up. Let's look at BTG. BTC, this is the move. I've been, you know, nobody's talking about Bitcoin Gold. I've been talking about it just because I'm just about the charts. You know, that's my thing, is the charts, obviously, right? This is interesting to me because, one, Bitcoin is getting crushed, right? It's in a nasty downtrend, and you know, Bitcoin Cash has been under some pressure as well. But look at look at Bitcoin Gold. It's been trading sideways, and it really looks like it wants to possibly get something going here. You've got a move above resistance. You can see here. It was in a really tight channel, and so basically the big thing today is the break above the middle Bollinger Band. Okay, so it had been trading below this dark purple line for the last several days, for the last couple weeks. It turned into resistance, and today it's breaking back above. This is the technical move that we are looking for. So I'm just putting that alert out there once again, late at night, 11 o'clock at night. This is when it seems like I make these videos for the crypto, but this is when they start heating up, and so you can see it's breaking resistance. So we want to see that level turn into support, and the next level we want to see break is that 50-day simple moving average at 19.9. So a break above 19.9, that's going to signal it wants to head higher. If that middle Bollinger Band at 0.0166 of a Bitcoin, if that turns into support, a new uptrend should begin. Notice the very tight Bollinger Bands. We're looking for busting through the top of the Bollinger Band, and that signals it wants to head higher. You could easily see this run up to 24 up here, which is the closing price up here. So yeah, so keep an eye on it. We'll see if Bitcoin Gold can follow through. And then one more to look at is Guard Dog. This will be the last one, GRDO. You know, we did put out a lot of alerts on this today. You know, they're doing a couple different things. If you look over here on the right, you know, it caught our eye. They're doing 120 days of free trading shares lockdown. They're not going to dump shares for 120 days. That's what the company's saying. They said a couple days before that they're getting into the crypto game. They're gonna be doing some cryptocurrency stuff, and then today they put out their business plan, their mining business plan, and they're also going to give out $300 worth of Ethereum. And so that's kind of what what YouTube people are doing right now to gain exposure, is having cryptocurrency giveaways. And so this company is going to be using that to gain interest in the stock. And so notice it was pushing really hard into the close. It has a strong upturn going. It's riding EMA4 support higher. If the company, usually for these penny stocks, or that trade over the counter, the companies are the ones themselves that kill the rallies. So if they are refraining from dumping shares, you know, it could get an extended rally going. So we'll see. You just have to follow the charts, though. You know, you can't drink the Kool-Aid. You just have to follow the charts. And yeah, you could see it was pushing here into the close with a nice volume spike, getting it up to 0.003. It's trading above all the moving averages on both the daily chart and the 15-minute chart, riding EMA4 support higher. It's as bullish as it can get. So keep an eye on GRDO next week. Okay, thank you very much for this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com. And it's really about coming and checking us out at the chat. The premium chat's where it's at. I will post the link below the YouTube video. Thank you.